Good morning, one and all. I hope you are well. I hope you had a great weekend and welcome to this morning's video. I have three pairs on watch this morning, and those are Kiwi Yen, Euro Aussie, and Aussie Swiss. And just to say that I think I may have found the root cause of the feedback that's been on some of my videos. I believe it was just a little bit of a kink or the XLR cable being pulled a little bit too tautly. Is that even a word? It was a little bit too taut where the XLR cable actually connects into the microphone. So I've just kind of loosened that so it's not being tugged. Okay, and it seems to have got rid of the feedback, hopefully, he says. But anyway, I have three pairs on watch today. My favourite of the bunch is Kiwi Yen. Look where we are, folks. Okay, this is where people rush in too quickly. Not me. Okay, I'll be waiting for the right criteria to be met, but this is definitely where people rush in too quickly. If we zoom out to the monthly, we are at an all-time high on Kiwi Yen. Now, what's significant about that? Well, I often think of these significant highs, and in particular, all-time highs like major train stations. Okay, so it doesn't normally just happen that we get to these areas, and then boom, we get a sell-off. Okay, or as many would believe, we break above support, becomes resistance in one or two candles, and then boom, we go to the upside. Okay, I think of these as like major train stations. So if you're from the UK, I kind of think of these as King's Cross Station, Paddington, up where I am in Scotland, Edinburgh, Waverley, all these big train stations. Now, at these big train stations, you generally find a lot of people get on or off of the train. Okay, at the minor train stations, the less significant ones, less people get on or off the train, as I'm sure you've experienced. Okay, so if that's the case, okay, using that logic, price will often hang about in these areas for longer to allow people to get off or on the train than they would do if it was a minor train station. Okay, so that's the first bit to bear in mind. Okay, the other clue that this is a significant area of value, not that it really needs much thought on that matter, is that we have a near, because we can see it sticks out like a sore thumb, and we had the very sharp move up followed by a sharp move down on even on the weekly chart. So this is clearly a high area of value. Okay, the other clue is that we near missed to it, but again, we don't really need clues when we're sat at an all-time high. We're at the area of value now. Now, what happens? We normally break above these areas of value if we're going to move to the downside. Why is that? I haven't mentioned that for a little while. Well, at these significant areas, they attract media attention. And I don't mean like necessarily newspaper attention, but if you think of your broker, if you're trading directly through the broker or you're paying attention to all these news sources get hold of the fact that a pair is at an all-time high or a significant high, whereas they don't tend to get hold of the fact that price is at a less significant high. Now, what does that mean? Well, that means that if your broker or whatever trading news source you're listening to is saying something like Kiwi Yen at all-time high, to use a headline, okay, that I remember when I first started trading, people think, well, it's just going to keep going then, and I thought, well, surely that you'd buy it then because it's going up and up and up. And then a little while after, a few months in, even though I wasn't very experienced, I thought, well, that doesn't make sense because if it's at an all-time high, surely that means it's expensive. And in business, you sell things that are expensive and you buy things that are cheap. Okay, then the penny started to drop for me. So that explains why people who were involved in this buy here, who were making money on the way up, swing trading this. Many of them, one of the downfalls they make is when it gets to all-time highs, they think, what if it just keeps going? So they hold their positions when they know full well that they should really be getting out of. They hold them out of greed, thinking that it's just going to keep going. You then get people think that when it breaks above, that's it. This has been broken. It's going to keep going. You then get people thinking often that it's a retest to get long because now resistance has become support, apparently. So they start buying. Okay. You've got all of these in the mix, and then boom, we see it plummet to the downside. So that's kind of the psychology. I'm sure there's even more psychology going on there, but that's the nuts and bolts of a lot of the psychology. So we're at an all-time high. We zoom in a bit. Daily chart, we're still at an all-time high. There's not really much to this is exactly what I was anticipating seeing. So we had this kind of move. This to me just looks like people getting trapped into the shorts too early. Why? Because on the higher time frames, particularly at an all-time high, we usually break above if we're going to move to the downside. So I wasn't surprised by this little sell-off here. Okay, when was that? That was during the early hours of the night. Okay, that doesn't surprise me at all. This, to me, just looks like sellers being trapped in too early, and what I was expecting is price to just pull back steeply, and that's exactly what's happened. So what I'm looking for today from this pair is I'm looking specifically for a break above, okay, not a tap in. We've already had that, and price didn't commit, which is exactly what I was anticipating. I'm looking for a break above and a pushback down, and then at an all-time high, I would be very happy for a 3-touch 5-minute continuation or a 2-touch 5-minute continuation with a 3-touch structural approach. Okay, and then I would look to get short on the break because we don't trade risk entries within the structure on these 5-minute structures. Or if we got a 3-touch 15-minute continuation, so 6 to 8 corrective 15-minute candles, or a 2-touch 15-minute continuation with a 3-touch structural approach, then I would look for a 5-minute risk entry within the structure. Whoops. So like that, okay, or a reduced risk entry on the break. And then I would look to get short. Okay, there will be my first target, that low there, just because it's sharp. It's not really, I mean, you could say that one, but we could easily get the if we've broken above, broke back in and formed this, then there's no reason for price to go back up. Okay, I'm just looking for inflection points along the way. But my target would be, if we just zoom out, it would be this low here, because that's where I would anticipate some profit taking and price pulling back deeply, even if it is going to continue in the forecasted direction. And then that would give us something in the region of 12%. And I would use the mechanical management tool. I would set a take profit at the 90% area where price often pulls back about 50% of the range, even if it is going to travel in the forecasted direction. So I'm ensuring that I don't give too much profit back on a trade that may not even play out after that pullback anyway. Okay, take profit set there. I will trail my stop loss, and then we've got something in the region of 12.5% to work with. Do I think this is going to happen by the end of the day? Personally, I don't. You might think, well, why? Because we're at that all-time high. Well, as I've just said, price can, because it's such a major high, price can break above, it can mess about, we could get a retest, we end up like this for some time, collecting all those orders, and then boom. Okay, so price can hang around in this area for a long time just because it is at such a significant high. And I've got other pairs on watch. Normally, I would have a pair like this in my wild cards, but because we've actually just tapped the area, that gives me an indication that maybe this is going to be ready a little bit sooner than would otherwise be the case with pairs which are kind of floating around this area, for example, around here. But anyway, that is Kiwi yen. I've got the alert set just above the ray line to see if we can break above, because that's the first of my requirements. Let's move on to Euro Aussie. So Euro Aussie, and just speeding up ever so slightly. I don't know what that noise was going on outside, but you can see on the higher time frames, we are at this low here. Okay, we've broken below. What do we normally know? Usually we break below such a significant low if we're going to move to the upside, just as we break above highs if we're going to move to the significant highs if we're going to move to the downside. There is another low down there that's so far away it's not even. What on earth is that? There's someone doing maintenance work somewhere and it's really loud. There's a low here which is miles away, but I've just got this second on the list just because we have another place that price could gravitate back towards, and how it would likely do that. If it was going to do that, I shall touch on as we drill down. But we've broken below a significant low where we would anticipate people likely getting caught the wrong side of the market. Okay, if we're going to move to the upside, what do we have here? The clue might be this low test. So we have a bullish low test, bit of a wick above it. Okay, that's a slight negative, but we have a buying pressure here. Okay, we also have, just to touch on it, we have a 1, 2, 3 last leg. So 1, 2, 3. If we measure that, the legs are of a similar length, not quite, but we've filled about 90% of that. So that might be complete as well, that 1, 2, 3 move. If we just zoom down, okay, you can see now this could be one of two things. Now, this could be, okay, which is partly why this is second on the list, but this could be a bear flag, as I said last week, I believe, to do that, to push lower. And the clue might be that we've just started to near miss to it. But obviously, if you count the candles, we're on the 4-hour chart, that would not be ready by the end of the day. I did say, I think in the last video, that if we were, in my last video, that if we were going to move down to that low, I said we would likely need to build volume here. It wouldn't be a tight little flag. There wouldn't be enough volume for it to push lower. We might be building that volume by way of this structure. Okay, and if we measured that, and we measured it there, and we measured it from the break of the structure as well, because the volume that's been generated here can dictate how far price moves. Okay, which is why we measure it on the break. That would actually take us down to there. So contextually, that would actually make sense, and that's the largest structure that I said that price would likely need to form for it to go to the downside. I said that in one of last week's videos, but this is a daily forecast. So in terms of things that would be ready by the end of the day, or could be ready by the end of the day, okay, where does the sell idea become invalidated? It becomes validated if if we break above here, okay, which is basically the same as this area of value. It's the same price. Okay, if we break above that and we get a correction afterwards, then that invalidates the idea. That's the market saying, look, we're not going short. This is the banks and the bigger players stacking their orders for the next wave to the upside. And in this instance, because we've had quite a big move, and because I don't want to be tagged in, tagged out, and then price does something like this, like what I was just showing, I'm not looking for a 5-minute continuation. I'm looking for a break above, a 1-hour impulse up. Okay, if that were to occur, and then I'm looking for either what's happened here? Why is there an extra bullet point? Who put an extra bullet point in my forecast? How dare you? But if we broke above, got a 3-touch 15-minute continuation, or a 2-touch 15-minute continuation with a 3-touch structural approach, then I would look for to get long either on the break or within it. And then really there's no targets, there's no inflection points really until all the way up here, and that would give us something in the region of 6.8 to work with. Okay, so and we've got the sharp move there as well, and that makes sense contextually as well, because we've got this structure here. Okay, and that is the near miss to there. So effectively we've kind of got if we measure the range, we've kind of got that sharp move there, so that makes sense where price might pull back deeply from. Okay, so that is Euro Aussie, so something in the region of 6.8. So I would literally just set a take profit there. Okay, and I would trail my stop loss at the same time. So that's Euro Aussie. Okay, let's get those paintbrushes off the chart. And then last up, we've got just enough time to go through this. Aussie Swiss. So Aussie Swiss, okay. So one of the reasons this is last on the list is because this is not as significant as this low, okay, or that all-time high on Kiwi yen, okay. So it's a bit more of an inflection point, but the clue to me that it would still it could still be valuable is the fact that we near miss to it here, okay. So when we near miss to an area, that's often a clue that this is still an area of value, even though it's kind of more of an inflection point, okay. So we do have kind of this near miss here to this high, but that becomes invalidated, at least not invalidated, but it becomes irrelevant if we form an impulse. If we impulse back down below this area and also below here, just to touch on it, okay, and we correct afterwards, that becomes irrelevant at this moment in time. Not irrelevant completely, but that's the market saying, yeah, we've got an impulse correction, right, we're not going up to there just yet, we're trying to find liquidity from somewhere else, maybe here, for example, before then pushing all the way up to take out that high, which this high near miss too, okay. And you can see we've got that impulse correction potential continuation now. If we measure that, I believe it's about 50% of the range, which it is. It's almost exactly 50% of the range, so that would be a healthy pullback. We have a sharp move up, sharp move down. The price will likely gravitate back towards. You can see that potentially we have this impulse correction continuation to push higher to take us up to that area. And what do you know? It's almost bang on. It almost lines up perfectly with that. So we might get some impulsive momentum to the upside. Am I interested in getting long on this pair? Well, if we just measure the pip range from here to here, I mean, potentially you have something in the region of 5% to work with, but I'm not really interested in, going against the grain, as it were. Okay, swimming against the tide. In this instance, I'm more interested in a tap into this area of value. So I'm interested in a tap into this area of value, and then we have the sharp move there, sharp move up, followed by the sharp move down. If we tap into that, then I would be looking for a 1 hour impulse down, and then I would be happy to take a 3-touch 5-minute continuation with a 2-touch 5-minute, a 3-touch 5-minute continuation, or 2-touch 5-minute continuation with a 3-touch structural approach. Then I would look to get short on the break. If the same thing occurred on the 15-minute chart, or let's say the 1 hour chart, not that I think that would likely form there, then I would look to get short on the break or within it. Okay, so if we got the two bottoms, I would set the entry on the break. Okay, I'd then be looking for this. Okay, and then if we tag the top and got a rejection, then I would cancel the original order and let the other order, the secondary order, trigger me in. And then in this instance, I'll be able to manage it down to this first inflection point for something in the region of 2.6. And in this instance, I would actually mechanically manage it down to here, even though this is likely, where did we start impulsing? About there. Okay, there's the bottom of the correction. Even though we could find our way all the way down to there, because this is not the sequence is not the cleanest, for example. So we push down here, but then we immediately sort of scoop back up. Okay, and because we kind of have that near miss to here, this could do something like, I can envisage this doing something like that. It breaks below, it then comes back up. This forms a structure like that. Okay, this then becomes the middle section, and then we tap into that high, which this high near miss too. Okay, because of that, I'm okay with just a short-term play. If we had tapped into that high that we near missed too, then I would be more inclined to be looking to target this low here, this wick, because, as I said, if we measure the whole range, that would actually take us down to there, and that lines up perfectly. Okay, but because of all those variables, I'm quite happy to just take a take profit there. Okay, and trail my stop loss accordingly if that was to shape up. This looks doesn't necessarily look like it will be ready by the end of the day, especially as I'm on the 4-hour chart there, but we shall see. We shall see. That is my forecast today. I hope you've enjoyed this video, folks. I hope it's provided you with some value, and hopefully the feedback that's gone on these videos, the little bit of feedback that was perhaps a little bit distracting for one or two of you. But have a great day, folks. I will see you again in the next video, which will likely be made tomorrow. If I place any trades, I will start that video, or my next video, with a trade recap to tell you the thought process behind the trade if one was taken. But for now, have a great day, and I'll speak to you again soon. See you in the next video.